Hi everyone and welcome back to my morning report charts analysis videos on Wednesday 17th of August with me, Richard Perry, market analyst at Active Markets. Let's look at cable, and we've just had the UK unemployment data out with the average weekly earnings, and it's basically been in line with expectations on the headline datas. Unemployment still sticking at 4.8% and average weekly earnings at 2.3%. Let me just show you. But the interesting move was the claimant count change, which was down 8.6 or 8,600, whilst it was expected to be up 9,500. So quite a strong improvement in claimant account, which has helped to benefit sterling. And sterling is now jumping a little bit on the back of that. But it's interesting. The daily chart shows this sharp unwinding of sterling yesterday on the back of that inflation data for the UK that was mildly ahead of expectations. Big sort of short squeeze, I think, on sterling, and that that sort of rally that we saw yesterday from the 28.63. Yeah, 28.63 is the low on Monday. Added just shy of 200 ticks actually, about 170, 180 ticks, and it certainly seems to have unwound that move. Now, is this going to be the start of a recovery? You've got the stochastics which have crossed over positively, but I think generally speaking these momentum indicators are still very negatively configured. I think that this could just be a near-term blip to the upside. You've got this breakdown level at 30.60. That is the basis of the resistance still. Even now, today, that is still the basis of resistance. I'll show you on the hourly chart in a sec. But this unwinding move, I think, is just going to prove to be another chance to sell. Here we see the hourly chart where you can see this recovery yesterday, bumping up against that 30.60 resistance. Yes, it sort of hit 30.70 overnight, and it's just hit again 30.60 before just sort of coming back a bit. So that is clearly a level the market is looking at. This old floor that we saw throughout July, 30.60 is the new resistance. It would need, I think, a move ultimately above 31.60, to be honest, or this resistance or this rally high that we saw on the 5th of August, to really change the outlook sustainably. You've got another resistance band around 31 figure. The old support becomes new resistance. So between sort of 30.60 and 31 figure, there's still a pretty decent opportunity, I think, for some selling to go on, and it just depends on whether this short squeeze, which I think is what it is what the move that we've seen is in the last sort of 12 to 18 hours. I think that short squeeze will run out of juice and start to fall back again. So with that in mind, I wish you good luck in your trading today, and I will speak to you again later.